Times is here. Rohit Kulkarni from MKM Partners as well. Rohit, you just upgraded the stock in January. Did the numbers live up to expectations, including user numbers, which seem to be a bit of a disappointment?
User numbers are a bit of disappointment. I think there's a little bit of for everybody. Bulls, bears, people on the sidelines. I think expectations were high heading into print. What we saw from Pinterest, Snap, Facebook, Google, as in people thought Twitter would have a blockbuster quarter. It did, but the user numbers are soft, as in they are meh, in my opinion. I think the bigger question here is what is going to drive the stock higher? What happens to users in a post-Trump era? I think that's the bigger question. Any commentary around MDAU trends in January, February is something that I would keep a close eye on.
And Mike, Ed, as Mike referenced earlier, the other question around this stock is what Twitter decides to do with revenue models, subscription, fees, tipping, right, all sorts of things. Bloomberg had a report that they are seriously considering that. Ed, what do we know about what they're working on?
So, I mean, I think what they're trying to potentially take advantage of is this rise in sort of these newsletter subscription services. A lot of sort of individual lone writers are doing that, and it kind of mimics Twitter in that sense. And hey, let me tell you what I think, but in newsletter format, you know, as opposed to on Twitter. So I think it's a smart move if they want to sort of go that route. It's also smart potentially in that, you know, supposedly this might be more curated type content, basically edited content, right? And I think the overhang for Twitter and for a lot of the social networks in general is, you know, what Congress and what a Biden administration is going to be doing with Section 230, you know, in terms of how liable, you know, these services should be for the content that's posted. I mean, you know, we lived through this Trump era where, you know, Twitter was a big megaphone for the president and sort of caused all kinds of ruckus. So, you know, Congress is going to definitely be taking a closer look at that. So basically, the more edited, the more curated, potentially better. At the same time, I think users are plateauing in the U.S., right? So they're trying to wring out more revenue from existing users. You know, advertising is up 31%. I've done channel checks with some big media buyers, and what they've been telling me is, you know, they're moving a lot of their TV budgets over to digital, not just digital like video, but just digital period, right? So Twitter, Pinterest, Facebook, Google, you know, they're all seeing the benefits of that. So there's an opportunity here, but the overhang with the regulatory, I think, is still something to look out for.
Rohit, is now the time to pivot to a paid model, even if it means sacrificing users?
I think Twitter has a very unique, highly durable model. They offer something that no other social media network offers. It's an extremely resilient model, and I think adding an extra layer of monetization, I think, is the right thing. It is perhaps the smallest social media platform, but probably with the potentially the highest captive valuation of monetizable users. So I like if they go subscription route. Direct response is something they are working on. They already talk about 50% growth in MAP, which is their mobile application promotion product. So they're adding layers of monetization, and I think Twitter is turning around a corner. That was behind my upgrade.
Shepard Smith here. Thanks for watching CNBC on YouTube.